So ringing the opening bell today, we are seeing a downdraft continue in the markets following on the Fed's interest rate increase yesterday and the commentary from Jay Powell that emphasized to the market, not so fast, guys. The pause, the pivot, the whatever you want to call it. It doesn't appear to be coming anytime soon. And so after a big drop yesterday, we see the downward march continue today, particularly for the NASDAQ, which, as we have noted time and time again, is the most vulnerable of the three major averages to perceptions that interest rates are going higher. So as I mentioned earlier, Julian Emanuel of Evercore ISI said we're going to test the lows once again, which would mean more downside from here. Brad, what are you seeing there on the Interactive?
You mentioned technology and the vulnerability there. Fitting that is the laggard on the day for the major average, at least for the XLK, rather, the sector performance that we're tracking here on the day. Technology, that's down by about 1.6% out of the gate, the biggest decliner as of right now. But all 11 S&P 500 sectors are in negative territory at the start of trade here on this Thursday, ahead of tomorrow's jobs report. Also, taking a look at the NASDAQ 100, and a larger look at tech, if you will, you've got rare spots of green here on the day, and some of those earnings related. Datadog, one of those, but of course that's been a larger decliner over the course of the year. Microsoft just barely eking out some gains here on the day, as that's flat just barely to the upside there. And then additionally checking in on some of the other travel names, you've got Booking that's up by about 3.25% here on the day too. So we'll keep a close eye on the NASDAQ 100, as that perhaps is the most susceptible to some of these rapid movements within tech here as we're moving on throughout the rest of today's session. Julie?
Yes, indeed.